home mortgage. We're okay.
It's recorded. Yeah.
Okay. We're out of Birmingham. We just started an office here in Dothan late October, just before the end of the year last year. So we're relatively new here. We are in what people commonly know as the WTVY building on Foster Street downtown. And I'm basically head of things for what we do here in Dothan. I can't seem to get this to. It's like two slides is all I get.
Mouse to click the little air. I don't think that's right here.
Just have to click it through.
I thought I tried that. I didn't get any.
Got it. There you go.
Ah, okay. All right. So I pulled this from another. I've got like a couple of different presentations I do. One like how FICO scores work and how it impacts lending rates and that kind of thing. And this I stole from one, which is talking about the current state of things and the sort of expectation or projection of interest rates yet to come. But anyway, this is my daughter's artwork. She actually made this to it's kind of emblematic of the continuing struggle between myself and my wife. That's my wife and her bulldog Choco. She's got this chocolate covered bulldog, and there's always the struggle of her wanting to make Choco an inside dog and me resisting that. So my daughter cobbled together this little thing, but the graphic is actually a realtor kind of thing where he's just got a new listing and he's got the thumbs up. Of course, she made the thumbs down and pasted the bulldog over the for sale sign. But anyway, that just threw that in as kind of a little funny about me. But all right, so the company Classic Home Mortgage, any of you that have been in the business for any time, 6 months or so, I'm sure you have seen one or many, a handful of lender presentations. And what does everybody say, right? We offer all the many loan programs. We offer on-time closings, and we've got great rates, right? Who does not? So I wanted to speak to that kind of obvious stuff that people do have genuine questions about. As far as closing time, now, this does not count instances where there's title problems or we cannot get an appraisal scheduled or stuff like that. But outside of those kind of problems beyond our control, we average 18.2, 18.3 days from signing a loan estimate and getting things started to closing. So we're very fast. This is something that some others in the office put together to kind of explain the process, which I'm going to kind of speed through. It's I think pretty boring if you're not into that, but if you got particular questions, I can come back to that. But rate information, this is a big thing everybody wants to know. Where do you stand on rates? So as of now, and I price these based on what's seems to be pretty common with your government-backed programs, FHA, VA, USDA loans. Typically, those are people who do not have a lot rolled away for a down payment and typically do not have stellar, typically decent, but not top end credit scores. So these are priced based on a 660 FICO and basically maximum financing allowed, which is 100% for the VA and the USDA programs, and FHA go into 96.5%. You're very, very minimum 3.5% down. So on that basis, that's where we are with the government loan programs. Then on the conventional loans, I price that. Again, you'll see a lot of people that price it where, it's dead perfect 800 credit and, the guy's not self-employed and everything hits just right. And anything changes in that, of course, it goes up, up, up. But this is not the best rock bottom lowest rates we could do. This is representative of what somebody with, I would say better than good, excellent credit, but with a, fair amount of financing. This is 15% down, 85% finance. They would be, just just below or just above 5.5% for the 30 or the 15-year loan. Our fees, this is of course, our own fees, not talking about what cost of appraisal or third party stuff is, but for our own fee, we've typically got a 250 admin fee to, our work of working with the borrower, preparing the package. The underwriting itself is 1,000. And then there's also a processing fee, which I'll tell you, if for this, purchase price is not exactly the measure, but let me say for a loan amount of 200,000 and up, we'll almost always waive that processing fee unless there's, some difficult credit history to deal with, or the person's self-employed and employment income verification is difficult, or something that just adds more process, more difficulty. But if it's a clean situation and it's a substantial loan, then we'll typically waive the processing fee as part of that. So that's where we are rate wise. I find that we're very competitive. I really don't see anybody in the market that beats us. So beyond those obvious things, what I would say is actually unique, or what we really offer, is communication and diligence and follow up. And we stay on top of the files. That goes back to kind of the on time closing thing, but we follow the files all the way through. If you bring us something, we'll be in touch with you at least weekly, more often if there's problems along the way, or just as things changes. As the appraisal is scheduled, as we get anything along the way up to the point of the clear to close, schedule the actual closing. We're very deliberate in our communication with y'all and the borrowers. And the PALs I speak of is people who are pre-approved and looking. In other words, you brought us someone on a pre-qualification. We've sort of screened them and given them the options of, here's what we could do for you, and 2 different loan programs. They pick the one they want to go with, and then it's just a matter of finding the house, making an offer, and getting it to closing. Those people we call our PALs, so the ones that are pre-approved and looking. Those people we follow up with every week across, maybe a few weeks or maybe a few months, just depending on how long they're out there trying to find a place. All right, so outside of that, another common thing people want to ask about, want to know about, is what's new and different in the lending world. And so just a quick thing, there is a program now which we are a participant in, this Freddie Mac Borrow Smart program. And it's in large part sort of parallel to the USDA loan program. That's why I made this table to kind of compare the two. And USDA, like pretty much all of these government programs, are typically geared toward people, or let me say that people that gravitate to those loan programs, usually it's because they're looking for that, no down payment or minimal down payment vehicle. And so with these, there is a funding fee that, in theory is paid up front when the loan funds, but in almost every case, it's financed into the loan, just becomes a part of the loan. That's why the payment over here is like the real deal end of the day payment. That's figuring in two things, which is a finance in funding fee, done that way instead of paid at closing is overwhelmingly the way that it's commonly done, and also the mortgage insurance premium. So adding all of that in there, you can see that, you know, for a 750 credit score is actually a little bit less with a 660, which is, you know, kind of commonly used for your government loan programs. We're talking about, you know, $50 more, but very much in line with the USDA Section 502 loan. So as far as, you know, from the borrower standpoint, that's like a measure of what they see on a monthly payment basis, which is, you know, a better measure, I would say, than interest rate as far as, you know, what the loan costs them over the life of it. The upfront money is a situation where it would be 97% financing, but they're gonna get some amount of down payment assistance depending on income. And the figures I have here, by the way, are for Houston County, Alabama. They've got a, you know, county by county table. It would not be that amount for, you know, Lee County or Jefferson County, but those are the figures for Dothan and, you know, by the way, also Geneva County, Coffee County, most Henry County, most of your surrounding counties are the same. So what they do is at which is approximately 70 something thousand dollars. They take, I believe, 70% of that and 50% of that. So for everybody at the 70% threshold, they get $1,250 of down payment assistance through this program. For people at the 50% threshold, they get $2,500. So for somebody who's shopping for $100,000 house, if it's 97% financing, and then they get a $2,500 down payment assistance, you know, now they're at $500 out of pocket. It becomes almost 100% financing, like 99.5% financing. And there's a couple of distinctions. So you know, some people sometimes ask, well, you know, if it's so similar to the USDA Section 502 loan program, then why have the both, or what's the benefit, or why does it even matter, right? So one thing is, this is the USDA eligibility map, and as y'all know, like Dothan and most stuff within a 15-minute drive of Dothan, say, is in the ineligible territory. So you know, if it's anywhere in that shaded zone, your USDA loan is not an option for, you know, borrowers looking to make a mortgage loan on a property anywhere in that area. But this would be something that they could accomplish very near the same thing through this Borrow Smart loan program. The other thing about it is that the income qualification requirements are actually different. So sometimes it does work out better if you had somebody outside of that, Hartford, Headland, Enterprise, Ozark, wherever. The key difference is the USDA has this income limit, and you've got to take both borrowers into account. It's not an elective thing. In fact, the strict letter of it is that if you've got, you know, two wage earner spouses and an elderly parent or in-law living in the home that gets retirement and Social Security, you're supposed to include that income also. So, you know, that can drive it up. Whereas with the Borrow Smart program, you only need one, right? If one person can qualify for the mortgage loan, then you only need their income. So you could do his, you could do hers, or you could take the total, whatever works best, whatever you can qualify for the best deal through the Borrow Smart program. With USDA, you're bound to include everybody. That's just the way that USDA loans work. Okay, so that's what I had for this morning. If anybody has any quick questions, I'm happy to respond to. Otherwise, I'll let you continue on with your meeting.
I have a question that, those numbers that you were showing, on the slide before this one, what was the loan amount that was based on?
You know, I could look back, but as we stand here, I honestly don't know. But like the point is not so much, you know, what is the payment. I just wanted to use exactly the same parameters to have a apples to apples comparison.
Yeah.
Anybody else?
I guess the reason she was asking that is because we have a lot of like first-time home buyers that they always say we want to be between, you know, $600 and $800.
Right.
You know, so I guess that's why, you know, I mean, we kind of wanted to know.
And that was, how old is that?
Okay.
Number. When I said it over.
I mean, if you had somebody, we could certainly price it out, you know.
And your minimum for USDA is a 660?
No, that's not the minimum. I just said I use that as kind of a representative credit score, right? You know, there's people with certainly down to 620. I don't know about below that, but down to 620 works. It's just that the rate starts going up. With the government loan programs, something a lot of people don't know. If you've got an 800 credit score, you really don't get that much better of an interest rate than you do at 660. It really plateaus out at about 660 is why I use that. And two, that's just representative of what real borrowers come to the table with is, you know, 665, 672, something kind of in that range.
What, for this particular program, you know, like with USDA and FHA, you know, when they do the appraisal, it's kind of like an inspection part of the appraisal where you have, you know, certain things just won't go.
Right.
Is it the same thing for this particular one?
It is the same thing in that regard. It's not the same thing as to that follow-up inspection that they do with the USDA. But the front end stuff, you know, to my observation, is very much the same. All right. All right. Y'all have a good day.
Thank you so much.
I don't want to.
There, we'll just take it out.
Okay.
Okay, there you are. Thank you so
Thank you.
much. And thank you for breakfast, and leave some extra business cards too, if you don't mind.
Absolutely.
Y'all give me just a second here. Do y'all see my, oh, I don't see it on the small screen. There we go. Otis. Okay. All right, we're just gonna go over a few things really quick, and then we'll let Gunter come up, because I'm sure that y'all have a lot of questions for him. I know I would. Y'all doing good?
Hey.
Yes. Y'all had enough coffee? No? Well, y'all better get some. It's Tuesday. It's better than Monday, right? Right? Okay. Let's start off with some bucket fills or what you're grateful for. Somebody in the market center done something for you lately?
Oh my gosh.
Oh.
Carol Pink.
Oh.
She's my girl. While I was in Germany, and I had, you know, I had two houses on the market, and then another house, a buyer looking right before I left.
Mm-hmm.
I've had those houses on the market for almost 3 months, and guess what? Offers on both of them, and then a buyer bought. So Carol helped me through the process because I was 7 hours difference in time. Plus, I couldn't get my DocuSign to connect with my command. Anyway, I'm very thankful for Carol Pink.
I did not ruin your vacation, like Miss
No.
Monica.
No, I really appreciate her helping me.
Oh, thank you too. You brought my candy?
Chocolate.
Oh, good deal.
All right, anybody else? What are you thankful for?
I'm thankful for Jess because I received an alarming call. He was like, Alyssa, are you okay? And I'm like, yeah, what's going on? And he was like, I see your car on the side of the road. Is everything all right? And I was like, the side of the road? He was like, yeah, it's here in Headland. I was like, oh, that's my husband. He's prayer walking on the land. He was like, okay, I was just making sure everything's okay. I'm here to go over and speak. But I was like, oh, wow, thank you, Jess. I told my husband, I said, he's my hero. Oh, sorry, Miranda. Crystal, will you mute yourself? Please. Or John, will you mute everybody? Thank you. Sorry about that, y'all. Okay? Yes, you are. All right, who else? Anybody? Thankful for your spouse?
Miss
Kids?
Miss JoJo showed a house from, I forget where I was the other day.
You're in DC.
I was in DC. She showed a house for me the other day, to a couple's mother. But we're under contract now. And the help within the office too. Yesterday I was talking to Coach and I made mention, if y'all didn't know, I'm going to Jamaica a week from tomorrow. I just like to share that. But I was saying something about, that I'd be out for a week, and Coach was like, hey, if you need anything.
Perfect
just let me-
timing, Coach. He's bragging on you right now.
Just let me.
Oh.
But the teamwork within and the willingness to help people out is that's something.
It is
That means a lot.
It's really good.
Oh, I forgot Miranda. Miranda bailed me out too. She helped me while I was gone. So she's awesome.
Anybody else? No? Nothing? Anybody on Zoom want to share? I will call you out.
I'm proud of
We had a
that.
great class with JoJo last night. She went way over just because she was giving us so much great information and people were asking questions. It was really awesome.
Thank you, Joyce. So your class was good last night? How many people did you have show up?
9.
Oh, wow. That's awesome.
Awesome.
Thank you for coming, Joyce.
Yes, thank you.
And everybody else that showed up. All right, anybody else? And we'll move on. Okay, so we sent out a poll. If you didn't see it, I love you. Sorry. We sent it out. Email, Rockstars Group, and GroupMe. Thank you. We sent out a poll to see if you would like the team meetings changed to 9, 9:30, or 10. And I think 90% of people said 10 o'clock. Y'all must not be that 90%. Y'all must not be that 90%. I almost went in between and did 9:30, but because majority rules, we did 10. So they will start in April. We'll start having team meetings at 10 o'clock. We'll try it out, and if we don't like it, we'll go back to 9. Fair?
Fair.
My 9 o'clock people, I know y'all are mad at me, but I love y'all. And I know 2 of you right here. They wanted 9. So we're going, like I said, we'll try that out. If we don't like it and if we have less people coming, even though everybody said 10 was better, we'll go back to 9. Okay? Y'all good with that?
Yes.
Okay. Don't forget about Ignite. Who has signed up for Ignite so far? Susan? Okay, anybody else? I know a lot of like our brand new agents that just came on board, like it's mandatory now that you have to take Ignite whenever you come on board with us. So registration deadline is February the 17th. Books are $25 and they will be put on your invoice for the following month. Okay. Anybody got any questions about Ignite? It's the new one.
What's the schedule for that? I mean, what is it? 5 days a week? What times?
5:30. 5:30. Yep. And the reason that we're doing it every night is because now it's a 20 session program instead of a 12 session. And we don't want to drag it out over 3 months. So we're just going get after it and do it every night for, how many weeks is that? 4 weeks? Yeah. So, but it'll be good. And we're, don't get all excited and be like, oh, I can miss a class here or there. We will have a few that are makeup sessions, like a few classes in the market center that will be considered a makeup session if you miss one or two. Okay. All right. Come on. Don't forget about our newsletter. Did y'all look at the newsletter that went out 2 days ago, 3 days ago? Everybody look at it. Do y'all like it? Is that helpful?
Yes.
Okay. Mardi Gras parade. Who's going to the Mardi Gras parade? One person?
I'll be there.
Who has never been to the Mardi Gras parade in Dothan?
I need to go.
You need to go.
I'll be.
Look, let me tell you,
I'll be
I'm
there
not a parade person, and I think it was 4 years ago, my husband was like, oh, we're gonna go to the Mardi Gras parade, and I'm like, I'm a big parade fan, and he's like, I know, but it's Mardi Gras. It's, y'all, the first year we went, we watched it from the beginning. The second year we watched it from the beginning. We went to the middle and to the end. It was so much fun. You should go. Take your kids. It's a good time. Anyway, don't forget to look at your newsletter. It's gonna have everything that's going on that month. Don't forget our birthdays this month are Ashley Dean, Cami Alford, Debbie Baxley, Jamekia Knight, Donnie Gilliland, Misty Danos, Cora Bennett, and Monica Orange. Is Monica here? No. Okay, I thought she said she was
I'm on Zoom. Hi.
Hey, sister.
How you
Hey.
doing? Good morning.
I'm good. How are you?
I'm good.
We're glad you're here.
Thank
Coach Cap last month. Don't forget about our award ceremony is March 3rd. If you have not RSVP'd, I need you to RSVP so we order enough food for everybody. Okay. If you're not 100% that you're going to make it, I know I said this previously, don't RSVP, because I've noticed that, and I know that y'all are, you know, whenever you RSVP, you're like, oh, I'll be there. We had, I think the 100 Lives Changed event, we had how many people RSVP? And I think half of them showed up, which is fine. But McMichael and Gray, our fabulous in-house attorney, paid for food for 100 people and 50 showed up. So I hate to, you know what I'm saying? So if you know you can be there, RSVP. If you're not 100%, then don't RSVP. Okay. But the award ceremony is going to be fun. We were going to have it at the country club, like we have the 100 Lives Changed, but they're booked up. So I think we're going to have it at the Highlands again. I've already talked to them. They're good to go for that night, but I was trying to see if we could have it somewhere different just to kind of switch it up a little bit. So I'll keep you posted, but it is Friday, March 3rd. Okay. Any questions about the award ceremony? Who's coming? Okay, good. What else? Don't forget, has everybody renewed in the room? Everyone has? Okay, good. Not that, you know, not that y'all only deserve 1 month, but it is Black History Month. It's not just, you know, Valentine's Day and Mardi Gras and all that good stuff. It's Black History Month as well. I put a little quote up there where I can't see it completely. The time is always right to do what is right. Dr. Martin Luther King Jr. I'm trying to hurry because I don't want to keep Gunter up too long. In case you didn't know or you didn't see, our agent spotlight is none other than Carol Peak, because she was the Rookie of the Year. Not just in our market center, but in the entire court. That is a huge accomplishment. And I'm sure everybody knows that English is not her first language. So if Carol Peak can get out here and do this in this market, anybody can. Okay. If you've never sat down and had a conversation with Carol, you should. She is a go-getter. She's up here every single day. You can learn a lot from Carol. Okay, so congratulations. We're very proud of you. Okay, now I'm going to let you go ahead and come up. Gunter Price, the whole reason everybody's here, right?
Brought all my books.
Good.
Questions.
Do you need to put anything on the screen, or are you good?
I don't do presentations with slides, and
Okay,
I don't have
good.
anything planned. I'm just going to shoot from the hip. All right. So I'm Gunter Price. I work at Daniel & Associates. We've been around since 1940. We just moved over on Watley Drive, built a new building. Finally got everybody under one building after 20 years. We've been in the building next to us. So everybody's very happy. So it's a great honor to get asked to speak to a group of people. Anytime I can, I always do, but it is sometimes a little bit of a hot box because it's taxes and nobody likes taxes, but everybody wants to talk about taxes. So I don't know where everybody's at. We got a lot of realtors that have been practicing for a while. We might have some new realtors. So I was asked to kind of talk about what can be deducted, how to keep up with it, some tax advantages for realtors. And then, of course, everybody will have questions, I'm sure. So I'll start off with taxes are usually very, in my opinion, very specific. So I'm going to talk a lot of broad things that are just general, but what works for one of you might not work for the person sitting next to you. So, we just always have to remember that it depends on your spouse, your income, all these things factor in. And so you always want to be careful if somebody at church or at the coffee shop, whatever they're saying could or could not be true for you. So just always keep that in mind. As far as what are y'all's, does everybody want to hear about deductions, record keeping?
We're independent contractors,
Mhm,
so
mhm.
we don't get a W-2. So
Yeah.
address the fact that we're independent contractors and.
Okay, so independent contractors, most of y'all are gonna be filing on Schedule C. Okay, so you'll get a 1099 from Keller, and you'll put that on Schedule C, and then you have to account for all of your expenses. Okay, so I normally tell people you don't have to do this, but the more you treat your real estate sales like a business, if you were to get audited, the better records you're going to have, the more it looks like a legitimate business. If you go through your personal bank statements and you're highlighting stuff with IRS and saying, hey, yeah, this was a deduction. No, that was something else. It just looks like you don't have your act together. So I always tell people that have Schedule C businesses to have a separate bank account for your business. So, all your income goes into that bank account and you pay all your business expenses out of that account. And then whatever's left over, you write a check or transfer it to your personal account and you pay your personal expenses out of there. That just lets the IRS know if they ever audit you, you give them 12 statements, and guess what? That adds up to what we put on your tax return. And it's easy. There's no questions about that. So a separate bank statement, I know that's a little bit of extra work, but I think it pays off. It also helps you at the end of the year. A lot of people we see that have Schedule C kind of get to January, February, and they're going through their bank statements, taking their 1099s, trying to come up with everything. Well, if you know everything's in that one bank statement, you don't have to look through all your personal stuff or multiple bank accounts. It's all there. And that's the same thing for anybody that has rental houses or farms or anything like that. It's just good to kind of separate everything and treat it like a business, because that's what you are, an independent contractor running your own business. So as far as record keeping, I think that's the most important thing. As far as what is a deduction, basically it's everything that is a business expense. And everybody says, well, what is that? Well, obviously you're driving a lot, so you've got to keep up with your mileage. That's very, very important. Whoever's preparing your taxes is not auditing you. They're going to want you to have good records, but they don't have to have your mileage log. If you tell them, 2,000 miles or 5,000, they don't have to have that. But if you get audited, you better have it. So there's lots of things that we see people using. A lot of people just have a notebook and they just write it down when they go, where they're going. And then we've seen a lot of people recently have the little mileage apps on their phone where they get in the car. If it's a business trip, they just hit the button and it starts recording the miles and it knows where you went off GPS. So I'm not sure how much that costs, but a lot of people like those. And as far as other business expenses, meals and entertainment, you got to know who, when, and why. So I always just take my lunch receipt, where you're at, the date, that's all on your credit card receipt. write who you were with and what you talked about, and throw it in a file, and you've got documentation there. Let's see what else.
You want to speak to the fact that meals are only, you only get 50%.
Well, this year
Yeah.
you get 100%.
Oh, really?
And last year. So when COVID hit, the restaurants were struggling, so they actually did away with meals and entertainment, and then COVID hit and kind of they brought it back full force.
Oh, good.
So
Amen.
basically 100% for 2022, 2023, I believe we're back to 50%.
And what about, I keep seeing this in TikTok videos and everything, but like the section 179, I believe it is, with the write-off of your vehicle 100% the first year, and that's why a lot of businesses buy new vehicles. How is that applicable to us as realtors?
Could be. You get to take either the actual expense or the mileage method. You can't take both. You have to pick one or the other.
Okay.
And everybody said, well, which one's the best? There again, it just depends. What works for you might not work for you. You just have to sit down with whoever's doing your taxes and figure out, if you get a new car a lot, the actual might be the way to go. If you get a car and you ride it for forever, you probably want to go with the mileage method. You also have to factor in personal use. So if you are taking the mileage method, it's a personal car, and then you're just deducting your miles, at the standard IRS rate. If you get a car and you write it off, you're done with that expense. You only get to write off the gas going forward. So the mileage method that the IRS gives every year includes wear and tear on your car and gas. But then you got to think about what personal portion of the car that you have, and you have to justify that. So I'd say probably most realtors end up using the mileage, maybe 80% that we see, just because it's.
So do you see more corporations using the section 179 instead of independent contractors?
Yes, but that's just off the size of the business. I mean, you got a company with a fleet of cars. The bigger the entity, the more you're going to see aggressive deductions.
Okay.
But can't you do the 179 like if you buy a computer or something like that? You can still use the 179
Yeah.
expense.
So basically, it depends on the life of the asset. So if you're buying a computer, it should last you multiple years. So they want you to capitalize it, meaning you have to expense it over a set number of years. Same thing with a vehicle. But you can take section 179, which is basically just accelerated depreciation, and you can write it off in the first year.
Okay.
And save taxes.
Okay.
You have to be a LLC to do all that.
Do not. You don't have to be an LLC.
What's the advantage?
Yeah,
Of an LLC.
at what point should a realtor decide to become an LLC?
I mean, if it's just, if you were a broker, there would probably need to be an entity, but just as a individual, I don't know that you would have to have an LLC. An LLC would be for liability. Most people use LLCs, corporations, for liability protection. All of your services all your income is off your services for the most part. There's some exceptions, but most realtors are operating as Schedule C, independent contractors. I don't think that's necessary from a tax standpoint. If you were a single member LLC, there would be no tax difference. It'd go on Schedule C, just like just an independent contractor operating under your name. Some people get an LLC or an EIN, so their social security number is not floating around when they're passing all that out for tax information to anyone. So that's the reason we see a lot of times.
But would it be beneficial if you got rental properties to have in an LLC?
Yes, but that would be on a Schedule E. So you want to keep, you always want to keep your activities separate. And when it gets to tax, we might be able to offset income and losses to save you taxes. But for your record keeping, you wouldn't want your rental property to be attached to your real estate sales income, because one's earned and one's passive.
I keep hearing people say you need to, like, for every check we get, our commissions or whatever, we need to set aside 30 or 40% of that. Would you agree with that? Because I think it says online, we looked it up,
15.7%.
yeah, it's actually less than that.
17.7.
15.7 or something.
15.3% is Social Security and Medicare,
Okay.
and that's what you pay on self-employed income. And then you have to pay income tax on top of that. So depending on what your income tax level is, and that would be different for all of y'all, but you know it's gonna be 15.3. And then if you're in, whatever federal income tax bracket you're in, you might be in a 12 and then 5 for the state, or you could be in a 20, whatever federal bracket you're in. So, and that's off your net income after taxes. So it's not on your gross. So when you get a check from the agency, it's not, you got to take 15.3 and whatever your federal and state is, because you've got mileage, you got all these expenses. So that's the benefit of keeping records throughout the year. You know where you're at, and you should know, hey, I need to have X reserved for taxes at the end of the year.
So would you agree with the 30 or 40% as far as?
Most of the
Set
time,
aside.
most of the time.
With that being said, then, is it about, I mean, if you've got a spouse that's employed,
Mhm.
we're realtor,
Mhm.
is there any advantage to filing still file married?
Yeah, there are very, very few times that we recommend anybody do married filing separately. There's just not a lot of advantages to that.
More disadvantages than.
Yes, so we see that when people have like bankruptcy issues, or if it's a second marriage with some things going on. But I mean, we can click a button in our system and shoot out a report. When people ask that, they'll say, hey, I click the button and it shoots up and say, here you go, y'all owe this much more if you file separately. And so we don't want to do that all the time, because it's kind of a waste of time, because 99% of the time, you're better off filing together.
Got
it. What else y'all got?
What's the worst situation you ever had as far as somebody coming in with stuff? Because I've heard accountants say they had shoe boxes full of receipts that had everything just piled in there together. Like, is that like if I came in there with a shoe box like I have in my office of stuff just thrown in there, like would you be like, listen, leave, I don't want to see you?
Well, no, we I've gone through, I've gone through a lot of shoe boxes in my time, and fortunately I have someone that helps me now, so I give those shoe boxes to them. They organize the shoe box and give it back to me. But I've done it many, many times. But it's all that. I mean, we have some people that's what they do, and they pay us to fix everything and not worry about it. That's what they want to do. And then we have some people that bring everything in nice and neat in Excel, and
Not gonna cost us much.
it's not going to cost us much. So it doesn't matter, just as long as everybody knows that going in. Yeah, I mean, we've had boxes and boxes. I mean, we've had people, that got audited and weren't doing taxes, and call and say, hey, here's everything, and we just got to fix it, or they're in big time trouble. That they weren't clients of ours, that we had to just help.
What percentage of audits do you see? How many audits do you have to go on, let's say, per year, would you say?
Well, I mean, so our firm does audits, like corporate audits, but you're talking about with IRS?
Yes, I mean, I'm talking about personal, for your clients. How many do you see?
That's hard. We get lots of letters, but we don't see that many real audits, like somebody showing up wanting to go through everything anymore. Most of it's done electronically. The IRS,
You just send the information to them. They send a letter and you send the info to them.
that's correct.
Done.
Just mail-in audits is what they are, and it just depends. If you don't have good records, you don't keep up with everything. I think we have a fairly low correspondence letter rate. I don't know what that number is. You know, the IRS looks at everything off, well, they link everything. So all the 1099s you get, it's all being sent to them, and they're gonna make sure it's on your return. And so if you do it wrong, it's gonna throw up a flag and they're gonna send you a letter. And it's all linked. And then after they check the income, they go into your expenses, and they know for a realtor on a Schedule C, you have to put in the code, what's your business, what percentages everything should be. So if your auto expense is twice.
Don't put that on somebody else.
Okay, if his auto expense is twice what the normal realtor's auto is for their gross revenue, it throws up a flag. That doesn't mean you're gonna get audited. That just means you've been flagged, and then it goes into a stack, and there's an auditor pulling, they might not get to you. So.
What is a P and L? I keep hearing that and I don't
Profit
know.
and
Profit and
loss.
loss. Thank you. No, I did something
Profit and loss.
and I was like, why do people say P and L? Anyway, thanks, that was his question.
What industry do you think gets audited the most? Is it realtors or is it like
Independent
strippers
contractors.
maybe? You know. I'm sorry.
I don't know. So typically, you know, Schedule C businesses have a higher audit rate. Just for the reasons I was explaining earlier, is that most people don't treat them like real businesses. There's a lot of commingled expenses, and it's very hard for you to document and justify everything. So it's a lot of low hanging fruit. So Schedule Cs are going to be more likely to get audited than the W-2 only, because that's all submitted to the IRS immediately, and they know, hey, this person had a $50,000 W-2. They pay tax on it. There's nothing to audit. Whereas you might get a 1099 for $120,000, and you got all these expenses, and then you net $50,000. So which one would you look at if you thought there was some potential for money? So that doesn't mean necessarily all of you are going to get audited. It just means you're a little bit more likely. But there's benefits. I mean, you know, y'all get the QBI deduction, qualified business income, depending on your income level. There's all kind of, you know, extra tax benefits that you get being an independent contractor.
Why is it a good idea to have a CPA do your tax return?
Same reason it's a good idea to have a realtor to say.
Well, I know that. I want your answer.
You know, y'all know you get what you pay for. You can go get your taxes done. Somebody that could or could not be there next year. We focus, I mean, our firm does audits. I do business valuation, mergers and acquisitions. We do everything. Tax is sort of the beginning spot for us. So if you wanted to work with us, we'd come in, meet with you, and then look at ways to save taxes legally. A lot of people want to not pick something up or do. You can save a lot more taxes just doing it right. So that's what the benefit. What we try to do with our clients is tax is the beginning, and we want to help you save taxes and build net worth. And if you just want somebody to do your tax return for a small fee, that's probably not us, because we're, you know, wanting to help our clients grow, because that's value add for us. And so that's the clients we are looking for actively. But being with a CPA should give you a higher level of comfort that it's being done right. You know, you can go and there's enrolled agents or people that just means that they have a number with the IRS to file tax returns. And they might be, you know, there used to be people, I think they're all gone now, but there used to be people that would do them for, you know, $150 or whatever, and, you know, make numbers up. And a lot of people have gotten out of that because software costs have gotten so high. The software we use. But you should get a higher quality of individual that knows what's going to cause flags, what's going to cause, and, you know, they're not auditing you, but they'll ask you questions and say, hey, you sure about this? This is going to look really weird. And then you can make a decision. Yeah, that's right. They're not going to let you do something stupid. You know, that's just, I mean, we see it all the time. Stuff comes in, hey, I got audited, and so-and-so down the road did it. I'm like, yep, there it is. It's just obvious. It's not right. So, what else?
Advantages of a home office.
You know, there's a simplified method for that now. I encourage everyone to do that. You don't have to prove anything. You just use the square footage of your office and the square footage of your home. No questions asked, no audit.
But if you're paying for office space, you can't do both. You can't write the office space off and do your can.
There's a little bit of a gray area there.
Oh, really?
But yeah, most of the time it looks a little odd if you're paying for office space and you have a home office.
But it probably would be uncommon for a realtor to do both, but anyway.
That's a hot topic right now with COVID anyway. There's just, you know, that's not gonna save you a lot of taxes. I mean, if you put it on there and you get $1,000 deduction maybe, because all your other stuff that's part of your home office, the home office is really just your square footage, the stuff, your electricity, all that you're not factoring in. You know, any like cell phone, all that stuff you're gonna be writing off anyway, so you wouldn't include that. Any printers, computers that you think is part of your home office that you buy, or you're gonna write that off anyway. So the square footage is really all you're getting. And yeah, the more you try to deduct a percentage of the personal, you know, we just don't see it. I just encourage everybody that has a home office, just take the simplified method and move on, because it's not a lot of bang for your buck.
You suggest everybody pay quarterly on the taxes?
If you owe taxes, yes. You know, I mean, there's ways around that. I mean, but yeah, I mean, and that's going to be specific for each individual. I mean,
What about extension?
I mean,
I do them every year.
yeah, I mean, there's nothing wrong with getting the extension.
Okay, so if you don't pay quarterly, you have an extension and you owe money, your interest starts the beginning of April 15th.
I mean, it starts throughout the year. If
That's
you're
what I'm saying.
self-employed, it started on January 1st, 2023. You know, you got to pay in quarterly. So the difference is, you know, your taxes due April 15th or April 18th this year, I think. Whether you get an extension or not, the extension just gives you extra time to gather your documents and file. And there again, it's just an estimate, but you should by April have a pretty good idea of where you're at. And if you don't, what I usually get people to do is go ahead and pay their first quarter estimate. If they're not sure, you can pay your first quarter estimate as part of your extension. That way we know you're overpaid, and then apply your overpayment to the next year. And that just makes sure you're safe. It just stops penalties and interest. If you didn't calculate right, or you hadn't gone through all those bank statements yet, that's what I get people to do.
I think Ms. Becky was asking because we keep hearing that realtors should do their taxes every quarter to, I guess, not have to pay as much.
Yeah, you do
If
quarterly.
you
You
say
pay
Quarterly
by-
estimates, yeah.
You pay the same, but you just don't,
It's
I
just
think what a lot of,
what
what a lot of people, happens to a lot of people is they procrastinate to the end of the year.
And
And then they end up with a $20,000 tax bill at the end of the year, whereas if they would have paid along the way, they would have had $4,000 or $5,000 tax
And you're
bill.
penalized too.
Right.
If you don't pay quarterly.
Yeah, so you should pay quarterly, and obviously the environment that y'all been in for the last couple of years, you should have been paying those no matter what, because you were just selling. You know, the disadvantage now is we could be coming on a period where things are slowing down, and then you just kind of have to estimate and say, you know, if I have a dry quarter and I've given this money, I gotta wait until I file, you know, so you kind of have to just see how your year's gone, what you got in the pipeline, what you think's gonna happen. You know, you might be one behind. You know, that's just kind of a decision you have to make cash flow wise if things are slowing down. Because expenses will continue on. If sales don't happen, you're still gonna have your dues, you're still gonna have your mileage, you're still gonna have things that cost money. So if you just said, hey, the end of September, you didn't sell anymore, your income would go down because you still would have expenses through the end of December.
So you either pay them quarterly or put them in an account where you can pay them at the end of the year.
Yeah, but you're gonna be penalized if you try. Don't do it like I did it before.
Yeah, I mean, that's there are some people that think they can make more money than giving it to the IRS, and they pay that interest and penalty every year. And that's fine, as long as they know that.
That's what I was trying to get everybody to understand.
Yeah, you're gonna be penalized.
Any more questions?
Well, I just want to say I highly recommend Gunter. He is my accountant.
We'd be happy to help anybody, but, I was asked just to give y'all some tax advice. So, I do recommend it, even if you don't use me, you have another CPA, I think all of y'all should be using a CPA. The benefits will outweigh the cost, no matter who it is.
I'll try not to bring you shoebox.
Anything I didn't cover? I kind of got into questions. I can't remember what other.
No, that's perfect.
Okay.
Thank you.
All right.
Thank you, guys.
Thank you so much.
I promise.
I'm back to work.
It's tax season.
I'll leave some cards here.
Thank you, Gunter.
Yeah.
I just have one or two more slides for y'all.
Thanks. Thank y'all.
Bye.
He really is good and he saved me money, just so you know.
I like him. He was very nice.
Yeah.
Did y'all enjoy that? Did y'all get something out of it? Did you learn something?
Yes.
A little bit. Okay. How many realtors would you like at your realtors open house?
Would you like?
Yeah. Yeah. Many as possible. Okay. How many do you attend? And you may go to a lot. We know Miss Olivia does.
Yeah, rubber.
Right? Do you, and I know that, you're extremely busy, but do you try to go to Realtors Open House if you can on Tuesdays?
Well, I
Yeah.
think the last 2 years we didn't have to. because we were-
Right.
But
Right.
now, and I have to admit, I haven't been to any this year,
Yeah.
but I can see that it's gonna become more and more important as longer the houses are on the market, it's gonna be more and more important
Yeah.
to have them and to go to them.
Yeah, there's definitely open houses now compared to. So let's start supporting each other. Every single Tuesday, Miss Olivia used to do a little caravan. And I think it's very important, especially with us having so many agents. That doesn't mean that you only go to our agents' open houses, but I think it's extremely important for us to support each other. And what I would like to start doing, I've been saying for the longest time that I want to start going to realtors open houses again. And what I would like to ask of y'all, if you know that you have a realtors open house coming up, and we know that they're not usually, a month out. We know you schedule it for, the next week or 2 weeks, whatever. Email Miranda when your realtors open house is, the time, the date, who your sponsor is, what you're giving away, all that good stuff. And Miranda will put it on our calendar. Now, obviously, if one of you email her today, she can't add it to the newsletter because we've already sent it out, but she can put it on the calendar. And what we like to start doing is trying to go to realtors open houses on Tuesdays after the team meeting. And I want y'all to hold me accountable because I want to be at your realtors open houses. I do. So shoot me a text and say, hey, don't forget about my realtors open house tomorrow. You gonna be there? Because I want to start going. Okay, will y'all do that? Email Miranda and text me and make me come. I need to get out of this office a little. Any questions about that? I think there is,
There's 3 at 11, I believe. There's Megan,
Coach.
They're both on Evans Road, and then Tim's having a group one or something like a mile from it. I don't know what.
Is that one out on, is it out on Freeway?
Maybe. I'm not sure the address, but.
There's 5 or 6 of them.
Yeah.
Is it 106 on that river?
So if we change our team meeting to a 10
Okay.
on Tuesdays,
we're gonna be pushing it.
but a lot of people do it from 10 to 12 or 11.
See, I thought they were always like 11 to 1 or 12 to 2.
I've seen some 10 to 12. I've seen a lot of 10 to 12.
And today they're all 11 to 1.
Right. And what we'll do on those Tuesdays that I know that there are realtors open houses, we will try not to have the meeting that long, because keep in mind, we don't have a team meeting every Tuesday. Okay. Okay with that. Okay. Little motivation for you. I love Steve. I'm sorry. If y'all don't like Steve, I'm sorry. I love him. I love Steve. Will you get that? Thank you.
You have got to change the way you think. It is the whole determining factor of where you go in life. We are all where we are today because we thought ourselves to this position. If you don't like the position, think yourself out of it. Your brain is divided into 2 halves, positive and negative, good and evil. It don't function on nothing else. Ain't no neutral ground in your brain. It's either positive and good or negative and evil. Each half of your brain has millions of factory workers on each side. You got 1 million factory workers on the positive side. You got 1 million factory workers on the negative side. At the forefront of each one of those factories in your brain is a foreman. You got foreman positive and you got foreman negative. You are in charge. You're the boss of the factory. Guess what? We are how we think. You can't make a world, but you can make your own world. So now, since your brain is in 2 halves, let me show you how this works. You wake up in the morning and you say, man, I don't feel myself today. I got up on the wrong side of the bed. I'm not a morning person. Foreman negative hears that. He steps to the front. He said, what did you say? You said, I said I woke up on the wrong side of the bed today. I'm not myself. I'm not a morning person. He says, you got it right away. He said, hey, the boss just woke up and said he's not a morning person. He's having a bad day today, and he ain't feeling himself. Let's get to work. The 1 million factory workers start producing thoughts to justify what you just said. So now guess what? Man, I hate my alarm clock went off this morning. I got to get out here in this traffic. I will drive down here today. I don't even like these people on my job. I couldn't stand this car I'm finna get in this morning. Sure wish I had a new car, but I'm driving this ragged ass car. And your day starts tumbling into what you ordered at the top of the day. You can wake up in the morning and you say, you know what? Today is going to be a great day today. I expect something really good to happen to me today. You said, what did you say? You said, I said I'm having a great day today. I expect something good to happen today. Foreman positive turns around and goes, all right, let me have your attention. Steve's having a great day today. He's expecting some wonderful things to happen. And man, let's get it going. And they start manufacturing thoughts. Same brain. Man, I can't wait to go to work today. It may not be the job I want, but at least I got a job. I'm sure grateful I got a car to drive to work today. Hey man, at least I got a check coming in. I appreciate the fact that I don't have a car, but at least I can walk to the train. Man, this is gonna be great today. That's how your mind works 24/7. It never turns off. Change your attitude, you change your altitude. It all depends on how you look at it.
Our lives are mostly affected by the way we think things are, not the way they are. The way we think they are affects us most. And Shoaff taught me that the mind is like a factory, a mental factory. And whatever you think about all day long pours ingredients into this mental factory. And that's what builds the economic, social, financial fabric of your life. As you think, so you become.
Oh,
It's a great day to be here.
You have
After talking about taxes, I gotta tell my negative foreman to sit down.
all right, so he opened up that video by saying you have to change the way you think. It is the whole determining factor of where you go in life. I listened to this video last night and I felt like a completely different person. Anyway,
That's good. Good stuff.
happy Tuesday. Happy.